All right, guys, welcome to another episode of Renew Your Finance. We're going to get started. We got another great topic for you again tonight. We're going to be talking some tough subjects. We'll be talking about his, hers, and ours, and the term of combining finances for couples, and how we got past that hurdle, or how you manage that hurdle, or if you never decided to do that. So that's one of our topics that we're going to discuss tonight. So, and we'll also look at it from the standpoint of singles as well. Those that don't have to worry about combining with anybody. So, we'll touch on all those subjects tonight. So, all right. So, with that being said, we're going to kind of kick it off. Um, well, I'll start it off with me and Deshonda. I know at one point, um, we did each had our own bank accounts for a long period of time, and once we started on this financial journey, we made the decision to combine finances and start working more so as a team, which we thought we were working as a team before, because we did have one joint account that we basically paid all the bills out of, and then we still had our paychecks going into our own original bank accounts that we had when we got married. So we still had those accounts, and even though we added each other to those accounts, we still referred to them as her bank account or my bank account. So we weren't moving in the same direction as far as having looking at things as a whole, as ours. So I'd say, well, we'll transfer the money out of my account, or we'll transfer the money out of your account into the main account. So, and once we started this journey, we made the decision. We found that it was more beneficial as a couple when you're striving to reach certain goals, but you actually having everything all together, and you consider everything as ours as opposed to his or hers. So, did you want to speak on that from your side, of things, Shonda?
Yes. So in the beginning, it was a little trying, you know, wait a minute, this is the money I work for. So,
Right.
so trying to figure out, because like you said, we had ours, but a yours and mine also.
Hmm.
So anything personal, we would do from the hours, from mine, not from ours, from mine. So now how am I going to pull mine out of ours? So it was a little tricky at first.
Yeah.
We
Yeah.
managed to work it out.
Yeah, yeah, yeah. So for us it was good because, like I said, it required us to start working as a team to meet certain goals. And now, you know instead of worrying about hers or his, or whatever, now if we need anything, we just get it out of the account. Out of the we don't call it hers or his. We call it whatever bank the account's at, whether it's the Truist account or the SunTrust account, or Wells Fargo, or Discover, whatever the account is that we have that we pay the bills out of. That's the account that we use. So, but yeah, but Rondell, you want to talk from your standpoint, because I know you guys started from the beginning of your marriage combining your
Yeah,
finances.
yeah, we did initially. Stephanie and I, when we got married, we went through. Well, just going back and coming forward to where we at. Most of you on the call know, and some of you may not know, that I was previous married before me and Stephanie got married. And I would tell you that the number one culprit in that marriage dissolving was finances. That was number one. Um, and the reason why it was number one, because you have two individuals who know really little to nothing about how to manage money, and the spending was like totally out of control. There was one bank account, and this is how it'll come full circle, because even though you may have joint bank accounts, if you have two mindsets, it's just as bad as having different bank accounts, and you had two different mindsets. So we had ultimately one bank account, but that one bank account, we were really running up against the fence line every time either one of us got paid, because neither one of us was very, very savvy on finances. Where one weekend you come home, somebody spent $5,000, and then the other one's thinking like, hey, we got the first of the month bills coming up, car payment, mortgage, the normal things that come up. So ultimately, that being that inability of being able to manage the resources that God was giving us, which is revenue, money, it dissolved that marriage. I will tell you 100% it dissolved that marriage because there was always fighting, in warring, secret things that are done, like buying things and the other one doesn't know they're buying things. You think the account is balanced and you're looking at my silly self. I'm looking at the account itself, not really noticing the pending charges. At that time, I don't think they really was displaying pending charges. And then you're going out to write a check to go pay for your mortgage, or you're going to go write a check to pay for your car note or the car notes that you are that you're having, and you're going to find out that you're $300, $400, $500 short, or whatever the case may be. And so when that marriage dissolved, I really, took time to myself and thought about everything holistically. But finances was one of the things. And so fast forward, Stephanie and I was on the cusp of becoming married, but we decided to go to marriage counseling first. And during that marriage, there was a pastor out in Missouri. He sat us down and he said, "Have y'all pulled out both your financial records and have you both pulled out your medical records? You need to know where each other stands so you both as single individuals at this point in time can make a decisive decision to become one if you so choose to." Not to say that finances and medical records is the end all to be all, or whether you will or will not become one, but it plays a very important part for when you're going into a marriage, when you're talking about joining things together, because whatever she had coming to the table, whether it be bills or whatever, I was coming to the table at the same thing, and she deserved to know, from a financial standpoint. So we ultimately went through that course, and then when we got married, we ultimately, there was accounts that we dissolved and we made into one account. We have a one particular account that has several accounts under one banking institution that has several accounts under it. And so that's how we were able to come together and say, hey, this is what we want to do. But it was based upon me knowing things that I've done wrong previously, and some things that she brought to the table that she realized she'd done wrong as a single individual, and then getting the proper counseling that we need in order to make the decisive decision, in order to ultimately bring ourselves together financially in regards to our pending marriage. And now we still operate out of that same banking institution today. And it's played wonders. And so that's what we do in order to have that transparency when we come down to the finances that come into our home and being good stewards of those finances.
Okay, good. Yeah. So that's one of the things. That's one of the things as we started talking about doing budgets and this type of thing, and the Holy Spirit came to me and he said, you may need to touch on this subject, because if you got people sitting down doing a budget and they're on two different accords as far as the finances, what are they going to have two separate budgets? If they're used to each one of them doing their own things, because I've talked to different couples and different folks that I work with, and they say that one person is responsible for a certain set of bills and the other person is responsible for these set of bills. So he may pay his own car note, she may pay her own car note out of their money. They don't really, they mix, they may pay the mortgage together, but other things in the house, they kind of separate. So when we're talking about sitting down and doing a budget, how does that work in that environment? If you're doing, are you going to have you each going to have your own budget that you're working off of? And, but we just figure as a married couple, you want to do things together, because the Bible says, you become one when you get married. So you are working as one accord. And we found that people are more successful statistically when they tend to work together as a team, as opposed to trying to do two separate things. That's one of the key things that we really wanted to bring to people's attention. Is something that you should sit down and talk to your significant other about, and figure out exactly, set some goals that both of you are want to work towards as a family. And one of our main focuses for, like I said, this whole community is becoming debt free. So, we hear a lot of couples where they say, well, that's her car note, she pays her car note. But as a married couple, all debt that's in the household becomes our debt. It's not his or hers anymore. It's ours. So that's just one of the things that we have to realize when we like I said, when we become a married couple and you're talking about meeting financial goals, having everyone on the same accord is what we want to do.
So I will tell you, Adrian, one of the pitfalls that I fell into early is unknown expectations.
Mm-hmm.
I think everybody has expectations, whether you be single, whether you be married, or those who are single that possibly you have a significant other and y'all talking about marriage. Is expectations not only in the marriage, but things that are made of the marriage, and finances being one of them. And I'll be honest with you, I was kind of hardcore when me and Stephanie was dating, just coming out of marriage that was not so good. So I was a little bit raw. Adrian can and Deshauna can test. One time I went off in the car, I just blanked and I didn't even know I blanked in the car. Adrian made some type of joke, and then I just went far left with it. And so when you're looking at things such as finances and other subjects that's revolving around the marriage, you need to make sure that you don't have not expectations that you did not articulate to the other party that is in your relationship, if that makes any sense.
Mm-hmm.
Because I can perceive something and I can say, this is what I want it to be ultimately. But if I don't communicate that with my significant other or the one who I'm looking to be one with, then that is not fair to the other party. That ultimately that's going to be involved in that situation of being on one accord when it comes down to finances, because really you're not on one accord because those things had never been articulated. And as Adrian already stated, I'm mentoring some people at my job right now. I got like 3 people at my job that I'm mentoring in the realm of finances and some other things. And one of the things that consistently comes up in that discussion is talking about finances. So I'm gonna open it up for everybody on the channel for you to chime in. Do you find it hard when it comes down to money or talking about finances with your significant other? Do you find that challenging, or you find that you are in an environment where you can freely talk about that subject without egos or attitudes coming into play in that subject? Or even with friends or family, because I understand we got some people on the channel that are single. Do you find that you're in good environments, whether you're with your significant other, wife or husband, or you're amongst peers or friends or family, that talking about finances, do you find that that's an easy subject to discuss in those circles, or you find it hard in those circles and you tend to avoid discussing that subject when you get into those circles? So I'll just throw that out there for people to chime in.
Well, I'll say, since I'm the only single person on here, I would say, as we had discussed in one of the previous sessions, trying to be around like-minded people
Right.
is very important, because I am finding that when we first started this and I first decided that I wanted to get all this together and get out of debt, one of my friends is just kind of like, it's hard communicating with her.
Right.
So I know that when I'm around her or I talk to her, I try everything I can not to bring up finances.
Right. Yeah.
Because it's like, not that she doesn't support me, but because she's in a different place than I am,
Mm-hmm.
it's always like back and forth, and it's I just try everything I can to avoid it.
Yes.
Now with other people, like I have one of my friends that just recently got married, and we've been talking about different things. She actually did the Dave Ramsey program before. So it's like I can talk to her about it and we have separate discussions. But yeah, it's hard to talk to some people. And like you said, if they're not in the same mindset that you are, or they
Right.
think, oh, well, no, I'm going to do it. If I want to do it, I'm just going to do it,
Right.
whether they have the money or not.
Right.
I mean,
Yeah.
so
Yeah.
it can be challenging for
Yeah.
sure.
Mm-hmm. Yep.
And I always talk to myself about it. We have no problem.
Yeah. Good. Yep.
So that is key. You'll run into those arenas where you'll have people who you can talk to and be well received. But for our married folks who are on the channel, and you could thumbs up or thumbs down if you don't want to comment on it. Do you find it difficult? Because I did, and I'll be honest with you. Me and Stephanie had arguments about this subject in regards to money and what should we do, or what. And this is after we've already joined our accounts, and so it was still a point of contention in our household when it came down to talking about money. I've alluded in our other sessions that Stephanie made a statement that you control everything, which made me feel bad because I didn't exactly know where she was coming from when she said that. So for our married folks that are on the counter, do you find that when you start talking about finances in your own households, do you find it, is it a point of contention or is well received by your better half?
Well, as the married person on the conference tonight, I will say Bridget has always been like the type of person who would kind of push me into the budget arena. She's the one who bought the Dave Ramsey books, and I pretty much left them on the shelf because technically, like, I have a built-in mindset that I know that when it's time to expand and when it's time to recess. Because I have like personal economy. So when Bridget, comes to me with Dave Ramsey book, I'm like, okay, I would love to do that, but this is a lot for me. This is a lot for me to do.
Right. Yeah.
So I mean, I will give her credit. She's always pushed it, but you, me, Rondell, we've always kind of did everything in the same type of phases. Whether it was acquisitions, we went through the acquisition phase together.
Yep.
So I guess this is time for the saving phase. So, I'm with a gentle pushing and probing for Bridget over the years. And we've had, had difficult conversations around budgeting and saving, especially, where we are right now in the midst of the war,
Yeah.
with a kid going to college and one going to high school. So, definitely finances have put themselves on the forefront. But yeah, I think that, this group itself is a great way, for me to kind of get out my concerns. As I said, my wife has really probed me in this direction. And now to see it kind of come into fruition, I know she's a little bit happy about that, but also at the same time, she's like, well, darn, I told you about this years ago.
and Rondell could say the same thing, because like Rondell said, he had been talking to his wife for 3 years, and then she watched somebody else do a video on a budget, and then the light came on, and she was like, "Oh, that's what you've been trying to say."
Yeah.
Yeah.
I give credit to God. Regardless of who was the messenger, as long as the light came on, that's all it was matter to me.
Yeah. So that's good. All right.
Absolutely. Deshaunda, you wanted to share something? I saw you come on the screen. Would you like to share?
Yeah, I was just going to say that in the beginning, it was really hard.
Yeah.
Because I did see it the same way that Adrian was kind of in control of everything. And that it, once the budget was set, that was it. It was, if something came up, oh, well,
Yeah.
even though we had money left over at the end of the month, and, it was a little confusing to me. So some of that stuff we're still working on.
Yeah.
But definitely doing it together.
Yeah.
And also I think it's with Adrian, he is a right now type of person. So we wanted to do the budget right here, right now, on this day. And if I wasn't in a place to do it, the budget got done anyway without me. So,
Okay.
Yeah.
because it was the beginning of the month and we needed to have a budget. So there it was. So,
But yeah,
we're still, working through some of those kinks. What were you
yeah,
going to say?
yeah. I would say, in my defense, I always ask, is there, how much do we need for the hair budget this month? How much do we need for, is there anything y'all plan on doing extra that's outside of what we already have documented in the budget? And for me, I'm pretty detailed oriented, so my budget is pretty extensive. So I have a line item for like everything, so I can go back and tell you how much we spent on hair care products, last year. So I'm a different type person. So that's just me, you know. So, but
Deshaun, did you use this much on a haircut?
Right.
I'm
Did you really
saying.
need all of that?
yeah. So, but yeah, but I at the same time, I can also go back and tell you how much I spent on electronics last year, or things I bought on Amazon, and that kind of stuff. So, which is not as much as it used to be before we started doing this, but yeah, but it's just. I think having that communication and sitting down with the other person and you guys making out those goals, and then you setting those goals to work towards those targets, and you have a plan, because that's what this whole thing is about, is us going through this whole program with a plan. You build out a plan for your life. The plan for my life and Deshaun's life may be different than Rondell's plan for his life, and Karen, hers may be different than somebody else's. But the thing is we're just giving people different perspectives on how to look at things that we probably have seen before, but never really thought about it in that direction before. And one of the things, like I said, about doing the whole budget was, what happens when, people on two different accords, people are in a marriage, but they have their own bills that they pay out of their own paychecks, and the other person doesn't see their paycheck. It goes into their account, and then they may move some of those funds into a joint account that they may pay certain bills out of, or either they pay certain bills out of their account and this person pays certain bills out of their account. And it's almost like you got two roommates living together that are sharing some of the household expenses, but ultimately it's still just two different entities as opposed as a joint venture.
Absolutely. So it's a journey that, in order for you to be successful, or the success that we've seen for people on this journey, is that one of the major pitfalls that they fall into is that mentally they're not on the same page about the goal, and the goal is to become debt free. Whether it be the goal is to make sure or accomplish certain mini goals in the course of becoming debt free, having, a 3 to 6 month savings, emergency fund saved up. Because we have found, and I found through trial and error myself, that it was counterproductive for the both of us who were not striving from that same goal, because we were moving at different rates and different paces. I think ultimately, and thumbs up, thumbs down in the room if you agree or disagree, I think ultimately we all want to get to the same goal, and that's to become debt free. So thumbs up and thumbs down if that's one of the goals that you're trying to get to in regards to your finances, that to ultimately not to be enslaved to someone else, like a lender or a borrower or someone of that sort. But what I come to find, and especially with the individuals that I'm mentoring in my office, is that they all have the same goal ultimately, but they're having different methodologies of how to get to that goal, and they're not on the same plan to get to that and to get to that goal. And that's where one of the pitfalls that I fell into. Our goal is to become debt free at a certain age, which is, originally I said 55, but I saw that we were being counterproductive. We were doing the things, but when it came down to the budgeting thing, the biggest obstacle to us was me, like Deshaun said, Adrian, when he does that budget, he does that budget. Same as but what I was leaving out is my wife. And what I was not doing is you know, communicating with her properly where she understands versus me talking to her in a language that she may not comprehend and understand, talking to her in a language that she can receive what I'm actually saying to her in regards to the subject that we're talking about, which is our finances. So we kind of flip the script. So Stephanie does a budget now. She writes it out, and then we sit down. She actually does the calendar, make sure that the calendar is updated on the Alexa, so that way on a monthly basis, when it's time for us to sit down and talk about the budget, it's driven by her. It's not driven by me any longer. So when we get into space, regardless if the first is on a weekday or a weekend, we have to do it because she doesn't set a pace that I agree to that is comfortable to her. So that way, when we sit down and talk about those finances and those goals that we're trying to accomplish, she was involved in that process, and she's no longer not feeling like, and that's what it boiled down to. She feeling like that she wasn't involved, is that I'm more or less dragging her along, kicking and screaming, whether she like it or not. And so, which has given me more benefit in other areas besides finances. Now that we have came to that agreement, and based upon everybody knows what everyone's expectations is about when it comes down to that subject. But yeah, it's totally true. You know, we just don't. The reason why we're re-exploring this topic, because those pitfalls will be there when you start traveling down that road to become debt free. If that's your desire, may be you're already on the cusp of it, and you just want to complete this one more goal and get over that hump. But one of the major pitfalls that I found out is that we're not on the same page when it came down to that subject. We're just talking about finances, and even how we were going to accomplish the debt-free method. Right. You know, why do we have to do it so fast? You know, why we got to go at gazelle intensity? You know, can we slow down and enjoy life a little bit? You know, different conversations that you have that are just hard. You know, and to the point where, you know, we just, you know, be frankly honest about it. We have disagreements. You know, open disagreements about it.
Yep. And like I said, it all depends upon the personal, you know, where you are and where you are with your current situation, and how much you want to change your current situation. So your goals are going to motivate you to do, like Rondell said, either you're going to do it. Some people are like, you know, this is my primary focus, and, you know, I want this debt gone, you know, as soon as possible, and that's going to be their primary focus. Somebody else may say, you know, I want the debt gone, but it may not be that much of a priority to them, you know. So it all depends upon where you are in your current situation and how quickly you want that debt gone. So one of the things that really benefited us when we did this, and we sat down with DeShonda and we went through and started doing the budget, is we set, you know, goals based on, once we were able to trim our budget and get a good budget together, and we were able to see where all of our money was going, and then trim back to where we weren't eating out as much. You know, we were doing AAU basketball with Alicia, so that meant we may be gone for a whole weekend. So instead of going out and eating every single time, we went to Walmart and bought, you know, deli meat, and we made sandwiches, you know, and we ate sandwiches and chips instead of going out to eat, you know, on some of those trips. You know, we did a lot of things to cut back, you know, because I had a goal of getting all that consumer debt paid off in 2 years. So once I put the numbers down and I saw, okay, well, if I apply, you know, if I cut back this much in this category, I can take that extra money and put it here, you know.
So I have a question for you and DeShonda, Adrian, since you touched on that. Did you and DeShonda discuss them deli meats and sandwiches?
Yes.
Before y'all, Shonda, I mean, you chime in now. Did Adrian discuss with you about the deli meats and sandwiches before y'all actually did that?
Yes.
Or did he force that on?
The sandwiches were pretty good. So the girls and I didn't have a problem with those, you know.
Yeah.
So we got to make it ourselves how we wanted, you know, to dress it up and everything. So we were okay with that. Yeah. And, you know, this year we knew that with those trips, there were sometimes that everyone would get together as a team and they would want to go out. So we also factored that in, because we didn't want to always say, no, we're not going, because, you know, that affects the team if, you know, someone's not there. But we knew some of the other times we were going to go to McDonald's and use the app and get, even more of a discount. So,
Right.
we kind of offset it. So, which the girls love McDonald's, so that was fine too. So, just little things that we do to kind of say, okay, but like Adrian said, preparing for
Right.
it.
Yeah.
We know
Okay.
what's coming, so we're going to plan for it.
Right. Mm-hmm.
And we are going to splurge and go to a buffet or go to a sit-down restaurant with the team, but we're also going to do these other things.
Yeah.
Awesome.
And with that being said, now there is times that they may decide to go somewhere that we may not be comfortable with going. For case in point, when we went to Myrtle Beach this year, they had made plans to go to a seafood restaurant in Myrtle Beach, a seafood buffet in Myrtle Beach. And I don't know if you guys have been to a seafood buffet in Myrtle Beach in this climate with inflation where it is, but it was $50-something a person. So there was 4 of us. So there was no way I was going. I don't even eat seafood like that. So there was no way that I was going to spend $200 and something going to eat seafood at a restaurant. So we politely told them we going home, and we stopped at McDonald's, used our app. I think we spent like $6. All 4 of us ate, and we was on the highway. So,
I think we were polite. I just know 5 minutes later we were in the car and we were gone.
Right.
When we realized how much, we were like, oh,
I'm not doing that. Now, don't get me wrong. We're 100% debt free, and we could have easily went and out to eat, but I didn't put 200 and something. Shoot, that's way more than I got in our budget for the whole month. So, for eating out at a restaurant. So I'm not about to blow that in one restaurant. And like I said, I'm not that big of a seafood person anyway.
And come to find out, they didn't enjoy it.
Yeah, and they were complaining about,
no.
Yeah, I think one of the team members said that they spent like, for 2 of them, they spent like $130, and they didn't even enjoy the food. So yeah, so but like I said, it's all right to tell people no if it's not in line with what you have set up for your family, within your budget in that time, So
So is it all right when you're married and y'all both got on one accord about the budget and you're discussing things? Is it all right to tell each other no when other things outside and other couples that's on the channel, and we're talking about your mindset, common life goals towards a certain purpose. Is it okay to tell your significant other or spouse or husband no when it goes against the mindset that y'all already established? Do you feel that that is okay? Or do you feel that it's all right to make certain concessions when it comes down to what you've already agreed upon or where you're trying to achieve? I'm just going to throw that out there because
that's a loaded question.
And I don't think it's a loaded question. I think it's a fair question. I think it's a very fair question because DeShonda has said that, there's some things that come out of the blue that is unexpected and you can't put it all the way down there that this is going to happen. And you being very disciplined in doing the budget, and I found myself in that same situation. So is it fair to say that y'all both come down, y'all slap the table, and y'all both agreed upon a certain situation, which is, hey, this is where we're going towards, and this is where we're moving towards, and the situation come up? Is it fair to say no if it goes against the ultimate goal that you're trying to achieve? So I got someone in the chat said no one likes to hear the word no.
Right. I agree with that.
But why?
I agree with that.
Why did they? What emotion does it go behind? Is it just an emotional reaction, or is it just no in general? That's why they don't like to hear the word no.
Yeah.
I'm gonna just throw that out there.
Yeah.
I mean, I think there's some concessions that you should make.
You should, exactly.
That you should make, as long as you 2 are in agreement about it. Right. I mean, the budget is fine to keep. But we all know that there's days, there are going to be cheat days. Yeah. And you should be able to relax those goals. I mean, you're not going to screw it up that much unless you're going to Vegas or something like that. But
right.
You shouldn't be screwing it up all in one night, Right.
Yeah. And I agree with that 100%, Avery, because there has been times where, okay, something has come up and we may have done something and it may have exceeded what I had for that budget line that week. And I may
Yeah.
take something that I had somewhere else and just say, okay, well, we really planning on doing this? And if
Mhm.
not, then, we may take money from somewhere. Maybe we had money for clothing budget this month that
Yeah.
we had a certain amount set aside. And we say, okay, well, I don't really need nobody needs any clothes this month. So we'll take that money and we'll move it over here or we'll do something else. But the key thing that people have to realize is that if the money that you have the money available in another budget line item that you can take. What you don't want to do is at the end of the month, you've overspent what you had for that month to do X, Y, and Z. So just
Gotcha.
because we couldn't do it this month or something comes up, we may have to move things around. But you still, at the end of the day, doing the zero-based budget, you still want that number to be zero,
Gotcha.
at the bottom. So you don't want to come up being negative where you overspent, because of something did come up. And that's like you said, David. That's that conversation that you have as a couple and as a family. Because I've even had to have situations where we sat down with the kids and said certain things, and explained to them what's going on. Because that's the other caveat that we haven't touched on a lot either. Is the kids are used to certain things on how parents were doing things before. They may come out and say, Dad, these new Jordans or these new shoes coming out, I want these, and those shoes ain't cheap, $200 is an average price for some of these shoes.
Mm.
For me, for me, I'm not spending
Yeah.
over $60 for my shoes. So I'll be real. So my days of spending that much on shoes is gone because I got other goals and things that I'm trying to do right now. But we sat down with our kids and we explained to them up front, Christmas is a lot different, now than what we were doing before. We were buying them stuff that they didn't even ask for, just to make sure that they had, what we got them stuff we thought they wanted, or yeah, and we, like I said before last week that we gave each one of them a budget of $150, for Christmas. You can use this for cash, gifts, whatever you want, or a combination of the two. And the kids were cool with that. They were like, okay, yeah, that'll work. And that allowed us to remain within a certain dollar amount for Christmas. So we didn't have to, go crazy over Christmas trying to impress people with all these gifts on the tree. So, yeah.
They don't get no inflationary increase. I mean, come on, man.
Well,
In this market, boy, 9% inflation is going on in here. Can they get an inflationary increase? I'm pushing this for Adriana. Can my girl get an inflationary increase going on around
We
here?
would appreciate that because she has been asking if she was like, wait a minute, we're debt free and we paid off all the stuff. So now can't we start going back to how we used to do things?
Go,
a little bit?
Adriana.
Because
Yeah.
we remember us saying, oh, this is just going to be temporary,
Yeah.
And of course, we're not going to go all the way back because then we'll be in debt again.
right.
But, can, loosen up a little bit, increase some budget items,
Yeah.
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 Because I will tell you that, Avery, I think I asked Avery this question a couple of weeks ago about the economy, because I know, Avery, I think that's your background. Your major is economics. Am I correct in saying that, Avery?
Yeah, economics business.
Yeah. So I was asking Avery about the inflationary cost and how everything is increased, because literally when you make that budget, as you were shown last week, you're going to have to adjust that budget. That budget is not going to stay stagnant.
Right.
And we had to learn, I want to say around March is when we first noticed that our budget has increased somewhat.
Yeah.
Basinary and inflationary increase. I think the one that really jumped out at us that we immediately noticed was the gas bill,
Yeah.
the bill to put it in our car, because mostly everything stays static. Your cable, cell phone bill, things of that nature, those things were static. That didn't increase in your life insurance, stuff like that. But when we went to go grocery shopping, and mind you, our grocery shopping menu to what we eat, we're pretty, consistent. We know exactly what we have in every night, what we're going to eat every night. We've just been doing that for years, and that's just how we've been, operating. And it's not because we want anything different. It's just we're masters of the 15-minute meal. We don't want to spend like 2-3 hours in the kitchen. We want to get the nourishment, get out. And so
we might have to do a class on that.
Yeah. So trust me, some of the things I eat, you'd be like, I ain't eating that. So like
I can vouch to that.
Yeah, they ain't got no plate.
Baked avocado.
Yeah.
Avocado, I'll be like, yeah, we finna have a Boca burger. What's that? Nah, you don't want that. Or a bean burger, a black bean burger. You probably ain't gonna want that. And it's all black beans. It ain't even no burger meat in it.
It was the zucchini spaghetti for me.
Yeah, zucchini spaghetti and stuff like that. So, but we noticed that the inflationary costs in the grocery stores, and we were like, holy crap, because when we made the budget, we made it according to what we thought the prices were still constant or stagnant or static at. And then we got into the grocery store and we picked up a can of black pepper, and it was just a small can, great value black pepper, like we normally get. And then my favorite chips, lime chips. And I realized my chips had went up 3 times, you know. So they cost 3 times as much as I normally would pay for. The black pepper was 50% higher than what we normally pay for a can of black pepper, and detergent and all that stuff. So we had to come back and realize, you know, that the adjustment in the budget based upon economic conditions, and Avery, back me up if you believe that's true or false, that based upon the economic conditions in certain consumable items, like we consume a lot, we had to change our budget based upon those economic conditions within those markets have changed.
Yeah, I agree, Rondell. The inflation rate actually is a supply chain issue. And I guess worldwide, nobody really realized how big an impact that COVID would have on the economy. But COVID has definitely been the game changer by decreasing the supply chain. And you know that if like you've shopped for certain things, you can't find them because of supply issues from other countries. When it comes to when the supply goes down, usually demand increases for an item. That's what, you know, early in the COVID stages, that's what toilet paper was one of the essential items that was in short supply. And you had to pretty much run around town to find some. But yeah, as demand increased, which now we are at that level where demand has definitely increased, that the feds are finally saying that, hey, we got to slow this economy down a little bit. And that's why they raised the interest rates to discourage borrowing. It's really a Band-Aid for the recession. Hopefully we won't go into one, but yeah, when it comes to food, food and gas are usually the first things that are impacted, that we're impacted as consumers. Okay. Clothing is usually supply.
Okay. So Avery, I got one question for you. So we hear a lot of people hear this on the news when they're talking about a recession. And a lot of people they hear the term, they know, all they know is it's bad. So yeah. What exactly is a recession?
If I can break it down into like a personal term, like because recession is pretty much an economic term for the marketplace for consumers, which we all make up macrocosmically and macroly. But personal recessions are basically when there's not enough income in the house for the lifestyle that you live.
Oh, okay, gotcha.
That's what a recession is.
That's the first time I've heard it put that way, and that's very simplistic and clear. So, yeah.
And you just multiply that by the consumers within a market, and that's what you get recession. Recession means that the market at this moment is too weak to uphold the lifestyles of the people who are participating in it.
So the caveat off of that is, for most people, they're not used to adjusting their lifestyles, but to a certain extent. So the way they're going to leverage that is by using their credit cards or going more into debt. So,
yep.
Okay. Yeah. So, yeah.
And that's why the Fed said we're gonna penalize you if you use your credit card. Wow. By raising the rate and saying that you're going to pay more and minimal income, or your minimal payments will rise, because they're trying to discourage borrowing in this economy.
Right.
Gotcha. Makes sense. Yeah.
With this microwave society, we got people that I don't think people really realize the extent of what that's going to do. I think
Yeah.
they're still so used to using their credit cards and borrowing money and getting HELOCs and home equity loans that that's what they're going to do when they run out of personal income. And I think it's just going to continue to grow. So
I would say yes, but if you and your significant other are on that same path, you know, you can kind of, and correct me if I'm wrong, you can probably you can recession proof yourself.
oh yeah,
You know, because like when we realize that those consumer items, because you got to have that flexibility, and that's why we do a budget every month, now a budget once a year.
Right.
Once we realized that those inflationary costs were that the vendors was pushing that on the consumers, we had to make some adjustments in some of the things that we were getting from the store. You know, and I'm not saying that we went without certain items, but we realized that we really start going through start doing our due diligence inside our cupboards. That was like, instead of going to the store without having a grocery list per se and trying to ad hoc it, like walk in there, oh, did I buy pepper last time? And then you go home, you got 4 cans of pepper.
4 cans in the cabinet. Yeah.
In the cabinet. We really started, like, every time we got to a point where we know we were about to use an item, or item got to a certain level of where we know we're going to run out of the item real soon, we made sure we threw it on the Alexa, you know, because once we got into the grocery store, Alexa will remind us that, hey, here's your grocery list. And as we were in the grocery store, we were checking off those items. But that's after we went through the cabinet, because we were notorious of having, do we need chicken breasts? And then I got like 15 packs of chicken breasts in there, and I bought another 5 packs of chicken breasts when I already had 15 in there, some ridiculous number. And so that's where we found ourselves that, hey, we need to be a little bit, and this is where Stephanie got on me. Hey, we need to be a little bit more like looking through our cupboards, so we keep our cupboards organized in such a way that we can regularly recognize where things need to be replaced or things about to come to expiration, so that when we go out to the grocery store, we know exactly what we're getting. Because in the market today, it may be $2, but if you buy that item 5 times and you already had that item at home, that $2 can be $10 to $20 that you just spent frivolously that you already had back at your home, and you could use that money for something else within your budget. Yeah. So again, the budget is not a stagnant thing. It's an adjustable, flexible thing that we do in our household on a monthly basis.
Yep, that's good.
So, I noticed one thing for me. I actually started doing my orders, like ordering online and picking it up, because I found myself picking up, like you said, Rondell, like picking up this or I didn't get that last week, or I didn't. And I was like, oh my gosh, I come out and my bill was supposed to be $25 and it's $75. And I'm like, what the heck did I get?
Yeah.
You know? Yeah. So I said, I know it might seem crazy to some people, but I was like, I like being able to order it online, so I know exactly what I'm going to get. The only thing, of course, with that is with the supply chain, in the event that they didn't have it, then if that was something I really needed, then I might not have that item, but not a whole lot. So, but yeah.
Okay. All right. Well, all right, guys. So we are at our time. This time went by pretty quick. But first, I want to thank everybody for your input. Avery, I really appreciate your insight on this, man. It's been very valuable to everybody. We just thank you for joining us.
I appreciate the invite.
Yeah. And we just thank everybody for coming out. Like I said, we've touched on a subject that we thought needs to be said, you know, about combining the finances and people having those conversations and trying to get around the mindset of these are his bills, these are her bills. When you're a married couple, they become our bills. So, and I think you can be more successful in attacking them when you attack them as a team, as opposed to each person trying to do their own thing and do things individually. So that's one of the big takeaways that we wanted to give from this is if you haven't thought about combining your finances before, or you feel like you may lose your independence, or if there's some other things there that may be outside of finances, some trust issues. Those are all things that, you can, add to your prayer life. Also, there's some things that may be underlying that may need, marriage counseling or something like that. But these are ultimately goals that, you want to work together as, to have that trust and work together as a team to achieve your goals. But that's the main thing that we just wanted to get out of this. And Rondell, you want to add anything to it as we close out?
So what I want to do is just keep everyone encouraged. Again, all households are different, and so don't think that every household has to be stamped the same way. It's really about you two ultimately, and where you two are desiring to go as a couple. I would say that, just sit down and have those candid and open discussions early, not later. I would encourage in that, and make sure that every party that's in that discussion, which is you two, not us four or anyone else outside the circle, have the opportunity to say their piece about that subject, so that they can actually get and convey how they're feeling or what they're believing in regards to that subject before you move out. I will stress again that outside of building a budget, that is a precursor to building a budget. You can build that tool, which is a budget, and say, this is what we're going to do. But if both parties are not on the same page in regards to that budget that that was built, then I would say you have a high probability that it's not going to be successful. A high probability. So have those hard discussions. If you love each other, as I know we all do here, and I know you do, then sit down and take to heart what the other has to say in regards to this subject, finance. Because most people won't talk about finances. They'll talk about a whole lot of other subjects. But this is one of the touchy subjects that tend to get people very passionate about. And so have those conversations open, and frequently, if all possible.
All right, guys. Thanks again for another week in the book. So we thanks you guys. You guys have a good week, and we'll see you next week.
Yep. Right. See you next week.
Right.
Thank you for joining us.
All right.
See you guys.
Bye.